We've seen a surge in deals happening in the healthcare sector recently. So is this a sign of a rebound in M&A? Well, joining us now, Chuck Adams. He is Citi's global head of healthcare, consumer and retail investment banking. He is also vice chairman of investment banking. And it's great to have you on the show, Chuck. Welcome.
Morgan, thank you. John, thank you. I appreciate you having me on. Happy Friday.
So we're going to start right there. What are your expectations in terms of a resurgence for M&A activity this year after we did start to see green shoots at the end of 2023?
Yeah, you're right. 23, a down year for healthcare M&A, a down year for M&A in general, off what was a down year in 22 versus 21. But if you look at how M&A played out over the course of 23, it accelerated towards the back half and really picked up momentum as we got into the fourth quarter. It seemed at the end of the year, there was almost a pharma biotech deal a week. And so we're optimistic about M&A in 24. I'd say cautiously optimistic. There's still a lot of things to worry about out there in terms of geopolitical headwinds. But as we talk to clients and as we look at our funnel of M&A, our corporate clients want to do transactions. Our private equity, who's been somewhat out of the market, is going to be back in the market. They have to put money to work. They have to sell things to return capital to their investors. And so I wouldn't say we're euphoric, which was a little bit of some of the reaction that we had noticed at a recent conference here that we all go to a couple of weeks ago, as we talked to investors and clients that we met with there. Again, I'd say cautious optimism, but it should be a good year for M&A, given what we saw at the back half of last year and what we think is going to continue into 24.
When you talk about geopolitics as sort of a key risk that could derail this narrative this year, in what way?
I mean, you name it. We've got two wars. We've got China that's still a question mark. I mean, there's a lot that could flare up that creates a risk-off approach to the equity markets. And with that as a backdrop, I think that CEOs start to think differently about putting money to work. Right now, we had an all-time high today that you're flashing across the screen at this point. That creates a very good context and market backdrop for CEO confidence and investor confidence if you're a private equity firm to put capital to work. But there could be a shock to the system from any one of these different, as I mentioned, geopolitical events around the world. I don't know how to predict which one, but we're keeping our eye out and staying, focused on whether or not, on any number of these different, potential issues. We're not letting that get in the way of our dialogue with our clients. I don't think our clients are burned out about it at this point, but it is something that's lurking in the background.
So, Chuck, educate me on this, because it seems like if we broaden out, just thinking about the possibilities for M&A in 2024, with private equity back in the hunt, as you mentioned, and with larger companies having this stock currency, we've seen, large caps outperform here. Does that set up a situation where to sort of grow into these valuations with them having a lot more control, perhaps over costs than over revenue, with rates higher for longer, that actually compels them to do more M&A and then try to drive efficiency after that scale?
I think it's a little different in healthcare, John. In healthcare, pick your sector, services, med tech, life sciences and diagnostics, biopharma, all of the companies are valued on their perceived future growth. And a lot of that growth is they're able to develop organically, R&D and how they invest in their business. Some of that inevitably comes inorganically from doing M&A. And what's really worked well when you look at just about every sector in healthcare is a disciplined and thoughtful approach to buying growth via M&A. And if you do that well and you integrate well, it accrues to your multiple and your valuation over time.